Hello guys, welcome back to my channel. For those who are new here, consider subscribing to my channel and also click the bell icon so that you are notified whenever I have new content on here for you every week. And also like this video because there is a lot of information that you are going to learn here free of charge. All I ask, to be fair, is to just subscribe to the channel, guys. Just take a second and hit that subscribe button. Thank you very much. So today we are learning a reversal strategy inside a daily candle. So we are going to look at a daily candle and 15 minutes candle strictly. All right. So we are going to look at two candles, daily candle and a 15 minutes candle. Okay. First of all, we will be look at the market structure. It's forming lower lows and lower highs. Okay. And then we get to this point where we have a candle that is bearish like this one. It's a daily candle. Be sure it's a daily candle on day one. This is the first day you have this daily candle, all right? And this daily candle, now as we have already determined that the market structure is bearish, all right? Okay, it's bearish for some time. And then we get to a support area. Support, we see a formation like this, all right? A reaction like this on the second day. So let's say this first candle, okay? This first candle, daily candle, closed, all right, at a significant support area, all right? And then the next day we see a candle like this one, either a hammer or a pin bar. If we see a pin bar or a hammer on the second day now, these are daily candles, guys, daily candles. So on the first day you have one candle, bearish candle, closing, okay? After hitting a major support, it closes above the support, right? And then the second day we have this candle, all right, that is either a hammer or a pin bar. I'm focusing on the hammer and pin bar because I've backtested both of them and they have really been effective, all right? So either a hammer or a pin bar, because a hammer is a candlestick that indicates a possible reversal or a change of direction, which is why I emphasize a hammer. At support, it indicates that the reverse to the upside is imminent, or it indicates that there is a possible reversal to the upside if the market has been bearish. All right. And a pin bar is also a reversal candle. It indicates indecision, kind of indecision in the market. That indicates a possible reversal. Okay. In this case, if we see that there is a pin bar or a hammer at support here, the second day, if it closes at the end of the second day as a pin bar or a hammer, then the third day we are going to go to the 15 minutes time frame and we are going to jump in for a buy. Be sure to note that this hammer or this pin bar, this is a hammer shown here. Even if it's a pin bar, be sure that this candle here closes inside the first candle. Okay, it has to be inside the low here. It does not have to close the whole first candle. It has to be somewhere here, around here. Not even half. Half would not be so good. It has to be less than a half of the first candle right here. Okay, so because it has closed there, now the third day candle will not be a daily candle. Okay, you go to your 15 minutes time frame. All right, this 15 minutes time frame we are looking to enter on the third day. It will be a third day. This candle has closed inside the first day candle. It's a second day candle closed inside as a hammer or a pin bar. And because buy orders, there is that accumulation. And then after the accumulation, there is a manipulation. All right, there's a manipulation. All right, and then after the manipulation, we need to see a break above. On the third day, we need to see a break above. All right, a break above that area. Okay, of the second candle, we need to see a break above and a retest before we can place our buys, and we target 1 to 2 risk to reward ratio in the lower time frames, 15 minutes time frame, guys. All right, we target these highs up here at the high of the first day candle, guys. of the first day candle, not the second day candle. We target the highs of this first day candle. All right, so this is how, and we can place our stop loss just below the daily low of the second candle. All right, but in the lower time frames, this would be a wide stop loss. So you just target a 1 to 2 risk to reward ratio, and you focus on those highs up there. Okay, this is how you trade this strategy, guys. All right, so first of all, market structure is bearish, and you are looking at support. The first day daily candle, it has to be a daily candle, will close after touching a support, reacting at the support. And the second day candle will close inside the closing price of the first candle, daily candle. After it's closed, you wait for the next day. That will be the third day. Now will be your entry. All right, you focus on entry on the third day. So on the third day, what you are looking for is candlestick patterns at lower time frames, like bullish engulfing candlestick pattern, to confirm your entry. All right, and then when you enter, you target the highs of the first candle, of the first day candle. When you are looking at selling, you are looking at the opposite. All right, you are looking at an uptrend. All right, let's say this was an uptrending market. It's going up. All right, this is an uptrend, and then the price gets to a major resistance area. When it gets to resistance, okay, it closes below that resistance. It reacts below that resistance. The price reacts below that resistance and closes on the first day. This is a daily candle on the first day. It closes here. So when it closed here, the second day candle now, we want it to close below. It has to close below, right here. It has to close below the closing of the first day bullish candle. If it comes all the way down here, that is an invalid setup. All right, what we are looking for is a candle that closes just slightly below the closing price of the first day candle, right here. Okay, so after that candle closes, you wait for the next day. On the next day, you are looking for entry at lower time frames, 15 minutes to be exact. All right, okay, 15 minutes time frame on the third day. This has to be the third day, all right, for our entry. So on the third day, the same thing happens usually. Before you place your trade, there is accumulation because people are placing their sell orders, okay, around this area. So there is accumulation, all right, because people are placing their sell orders. So there is accumulation, the market moves, and then there is manipulation, usually even weeks taking people out here, all right, on the third day. Then in your 15 minutes time frame, you just wait for your candlestick patterns on lower time frames, like bearish engulfing candle or double top at lower time frames, or three black crows like that. And then you place your sell position after a retest, some form of retest, confirming your entry to the downside. This is how you would trade this, okay, and target the daily low of the first day candle, which is this one. This would be the daily low, okay, this price here. Also take your partial profit in between here, all right. You can take in between here and also hold it or trail stop loss, okay, until you get to the low price of the first day candle. All right, remember, we are trading in between. We are trading in between the range of the first day candle. We are trading in between the range of the first day candle, because the second day candle did not finish the whole range, did not complete the whole range of the first day candle. It did not. All right, so it stopped somewhere there. Okay, so in this strategy, you are looking at candlestick patterns on the daily time frame, like a shooting star or pin bar. This is a shooting star here, depicted here. Okay, so on the second day, if you see a shooting stars closed, the third day you are going to your 15 minutes time frame, and you are entering after confirming with your candlestick patterns to the downside. This is how you trade these. We are looking at an uptrend, and then at a daily resistance, at the resistance here, we see this first candle. Take a look at this first candle here, the main candle. all right, this first candle. And so that candle number one, we are going to mark out the low and the high. So we take our horizontal line, we mark out the low of that candle, and then also the high of that candle up there. All right, so on the second day, we see a pin bar forming. This is the pin bar I'm talking about on the second day, this red candle here. So it closes just below. This is where it closes. It closes just inside the first candle on the second day. So on the third day, we are anticipating to sell. This has already happened. I'm showing you the history of it. So the third candle, on the third day is when we are trading this very candle. So this very candle is what we are looking to trade. All right. So on the third day, this is before this candle even forms. Let's say this candle has not formed. Okay. This candle is non-existent. It's not there at all. Okay. All right. So this third day, after marking out our highs and lows of the first day candle, and the second day we see a pin bar forming like this, and it has closed inside the first day candle. All right. And there's all this. So we are going to trade all in between here. What we are looking for is continuing this trend all the way down. Here is our target. All right. So after marking out the high and low of the first day candle, and we have seen the pin bar form on the second day candle, and it has closed. So we are waiting for the third day. On the third day, we go straight to our 15 minutes time frame. Right now, in our 15 minutes time frame, all right, we are looking to enter. As you can see, this is the daily candle high that we marked out, all right, before coming to the 15 minutes time frame. This is the daily high, and this is the daily low before we came down to the 15 minutes time frame. There's accumulation here because people are placing many sell orders. This would be our resistance up there, all right. So now this is at resistance. People are placing many orders here, so this accumulation point. And there's sometimes a manipulation here, in between here, usually during the London session, all right? So after the manipulation around this point here, okay, then we see a distribution to the downside. We see a distribution, all right? So we are looking to trade during the distribution phase. So this is what you do at in a lower time frame. So you can see that after the price broke below this previous low, all right, here you can see this previous low, all right, it broke below here, the price broke below and returned to retest. You can see a retest there before it dropped. So I would place my sell position exactly there, as I've already shown. I would place my position after the retest there, and target all the way down here to the daily lows. The price would fall and get to the daily low. You can see what happened if you held this trade to the end of the day, all right? To the end of the first candle, you'd actually win this trade, almost a 1-to-3 risk reward ratio. This is how you trade this, all right? And so from here, from this point from the high to the low of the daily candle, you have, in the 15 minutes time frame, you have 96 candles. So imagine how much you can capitalize on that. So looking at buys in a daily time frame, you can see that this is our support area, all right? This was a downtrend market, okay? This was a downtrend, and when it got to support, there was a reaction, okay? There was a reaction here. So our candle of interest is actually this candle here. Okay, so we're looking at the first candle, looking at that first candle. This is our first candle here, and this is our second candle, and that would be our third candle. That bullish candle would be our third candle, but let's assume that third candle has not happened yet. That is the range we are looking for. So we mark out the low of the first candle, which is this red candle here. This is our candle of interest, this red candle, all right? So we mark out its low, and then we mark out its highs there. And then the second day candle is a pin bar. it closes just inside, closes just inside there, it closes here. So it is just within the range we want, because we are looking for this distance from here to there. We're just looking to trade this distance here, from here to here, to the highs of the first day candle. All right. So now after the second day candle has closed as a pin bar, now on the third day, we go to our 15 minutes time frame on the third day to take advantage of the move upwards, because now at a daily support we have seen a reaction and we have seen a pin bar indicating the possible move to the upside. So in the lower time frame of 15 minutes, we are looking for a buy now. All right. So here we are looking at accumulation. All right, accumulation. And previously this market was moving in a downtrend, but now we can see that there is an accumulation here. Okay, an accumulation, and then there's a manipulation. All right. Okay, as you're going to enter the market, usually there is a manipulation around during London session, and now you are looking for a break above these areas. For example, in this case, we're looking for a break above here. We're looking for after this accumulation, because people are placing buy orders. So many people are placing buy orders at support. So you have this manipulation happening here. Okay, before it breaks above these highs, it breaks above there, and we have this retest. After this retest, we are placing our buy positions right there. Okay, now we are targeting a 1-to-2 risk to reward ratio. Okay, all the way to the daily highs. Now daily low of our first day candle. Okay, so this is what we are targeting right here. This is in between the first day candle, and we are interested in trading just from this point to there. Okay, and then we are out of this trade. All right, so sometimes this candle, the price action does not take us to the daily high of the first candle. All right, so you can take your partial profit in between here, and also move your stop loss just to trail the stop loss to the daily high. Okay, and in some cases it will break even higher, so take advantage of that. All right, to maximize your profits. So this is how you would trade this using this strategy. Okay, you target the range of the first day candle, but when you are entering the market, you enter in the 15 minutes time frame after your confirmation with your candles in lower time frames. Make sure you have confirmation. Like in this case, the confirmation I have is a retest of this area. There was a break above, a retest, and then this bullish candle here, indicating a move to the upside, which is why I bought from here. All right, targeting these highs. So if you held this trade, eventually it would hit your take profit. It would hit your profit, take profit over here at the daily highs right here. So this is how you would trade this strategy. Guys, it's very effective. It has worked for me. I believe it will work for you. So thank you very much for watching. Subscribe to this channel and like this video. Thank you very much. Also, comment down below your thoughts.